You're listening to Lender Lounge with Kevin Kim, a podcast dedicated to the private lending industry. I'm Kevin Kim, and my goal is to sit down with key figures in the private lending industry to talk about their business and their personal lives. We'll get their takes on market conditions, the industry at large, and their personal stories. Overall, I really want to learn more about how they started and grew their businesses. So whether you're a lender, a borrower, a vendor, an investor, or anyone just interested in learning more about private lending, this podcast is definitely for you. Thanks for tuning in and enjoy this week's episode of Lender Lounge with Kevin Kim. This episode is sponsored by privatelenderlink.com, where investors and brokers find direct private lending companies throughout the United States. In addition to promoting lending programs, this site also has a unique directory which lists service providers for the private lending industry. Investors, brokers, and lenders can use privatelenderlink.com as a resource to discover companies that offer a wide variety of services, including technology, accounting, insurance, marketing, legal, capital, appraisal, title, foreclosure, loan file audits, fund administration, servicing, and many, many more. Review each company's profile to learn about their services and contact them directly when you're ready. And if you offer services to private lenders or investors, privatelenderlink.com is a great place to advertise your company at a very reasonable cost. So get on your browser and type in privatelenderlink.com/services. There is no fee to search, and registration is not required. All right, guys, welcome to another episode of the podcast. This is Kevin Kim for Lender Lounge with a wonderful guest from a good friend, Lima One Capital, Dalton Elliott. Thank you for joining us today. Please introduce yourself to our audience and we'll get started.
Yeah, definitely thrilled to be here with you, Kevin. I'm Dalton Elliott. I'm the Director of Sales and Customer Experience here at Lima One Capital. I really appreciated y'all reaching out and eager to sit down and chat with you.
All right. Well, we've been chatting about, doing something like this together for a while. And, I think we connected at an Innovate show we did like a couple years ago, but I had actually met Jeff years ago at a show. I think it was in Florida or something like that. And you guys had the whole squad out there. Courtney was having fun. Jeff was having fun. And it was very cool to see your guys' journey over the years. So kind of walk us back a little bit. Tell us a little bit about the history of Lima One, how you guys got started, and what you guys are about.
For sure. I'm a sucker for a good story and fortunately landed at a company that I think has a great one. So we started probably at this point 11 years ago, right around there, really lending in Atlanta, Georgia. So the two guys who started the company, John Warren and John Thompson, they were infantry Marines. Right? So that's how they met. They met they were deployed to Ramadi, Iraq. So John, younger guy, is probably in his late 30s now. He was a captain. John Thompson was a master sergeant. So he was in for 20 some odd years. So they met over there. When they came back stateside, long story short, John Warren ended up starting the company, and John Thompson was the first, guy brought aboard. So they started lending in Atlanta on rehabs. This is the tail end of the crash. Money was incredibly hard to get. And sort of the birth of this generation of private lending that we know today.
So they jumped in right at the birth of when hard money became a real, when fix and flip, when business purpose lending started becoming a thing, right?
Yeah, that's it. The earliest of early days.
Very cool.
So they started in Atlanta and then shortly moved to Greenville, South Carolina, which is where one of the founders is from. And where I'm talking to you from right now, we're headquartered downtown Greenville, one block off of Main Street. So we love it here. But they ended up lending just the two of them for a few years. And then, you fast forward to when I got here a couple weeks after graduating college in 2015.
Out of college? First job?
Yep, first job.
Wow.
First job. So I was hired on 6 weeks after graduating college as an underwriter in our newly launched Rental 30 product. So 2 months before I got here, we launched the Rental 30 program. That was our first foray into anything above and beyond rehab lending.
So this is back in, wait, hold on. So I don't want to stop you. This is back in 15?
Yep, 2015.
So you guys are pretty early adopters of the DSCR product.
Yep, very. So we launched it. Our niche at the time was kind of the ma and pa investor, right? Looking to buy your first rental property. Maybe you have a couple. We were doing small portfolios at the time. So I was an underwriter in that program for a few months and had some opportunities to travel, do due diligence trips, and then was tasked December of that year with building out our mortgage broker program. Right. So at the time when I got here, I'm employee number 14. We had a handful of underwriters, and then we had some leadership. We had one guy in servicing. Today we have probably 40 or so people in servicing. So just to give you an idea of the crazy growth that we've had over the last 6 years, we were doubling for many years. Every year it was doubling originations year over year over year. So crazy, just unrestrained growth has been the Lima One Capital way. And then you talked about Jeff, right? So whenever John Warren, one of the co-founders, decided he wanted to run for governor of South Carolina, he tapped Jeff to come in and kind of fill the role of CEO. You can't do a CEO job full-time, growing a company, and try to win the seat of governor in a state. Tough thing to do.
Yeah.
So he moved on to run for that. Jeff came in. And Jeff, as you know, heavy mortgage industry experience, right? Decades. Probably he's been in the mortgage industry as long as I've been alive. So we were super fortunate to get him at a time when we were cruising to do, our first billion within a year.
Mm-hmm.
And so he came aboard, really continued to build out our people, processes, continue to refine the products. And 2019 was our first year where we did over $1 billion in a year, and 2020 was COVID. And 2021 has been just record month after record month for us. So,
so you guys are breaking records even in 21.
Yeah, for sure.
That's awesome. So let's take a step back now. You guys gave us a very good overview, and I didn't know you guys were founded by veterans. That's awesome. I had no idea. That's very rare to hear in the industry, but also like taking a small 2-man operation to, Lima One is probably one of the largest shops, if not the largest shop that right now in the industry. You guys are nationwide right now, right?
We are.
Every state?
46 states in DC will be.
There's some hairy states we all avoid, right?
The usual suspects, right?
Understood. So, but and when they started, it was fix and flip, right? When you guys started, it was just fix and flip in Atlanta.
Mm-hmm.
Okay, and so when was that moment when you guys really started to kind of like, all right, we got to break out of Georgia, we got to break out of the Southeast or whatever. We got to go and expand our footprint, because when what we started to see it in probably 16-ish. 16 to 18 was when you started seeing lenders do 2 states, 3 states, 5 states, a handful of national shops. And then all of a sudden in early 18, 19, we started seeing full national shop, 45 states, 50 state kind of shops. So what was it for you guys? Tell me that story.
Yeah. So shortly after I arrived here, we ended up getting an influx of institutional backing, right? Mm-hmm. So we moved away from what a lot of groups have as their start, which is you have a couple of high net worth, ultra high net worth individuals that pull up money. We moved away from that strictly into the institutional side of the fence. And so that really helped us catapult growth, drastically lowered cost of capital.
Sure.
And so it was in late 2015 whenever that sprint across the country started. So,
you guys are a little bit earlier than most. A lot of folks started expanding outside of the state. They were their home region in 16. So 15 for you guys.
Yeah, end of 15. I remember, the floor beneath me, which is where we had a portion of the third floor in this building. We had a big map of the U.S. and it was a race. You wanted to be the first one to close a deal in a new state.
Right.
So we'd have a big party every time we closed.
Right. And that's part of the mortgage broker program, I'm guessing, right?
Yeah, that was a huge part of growing the business, right? It's you have only so many ways to get leads. The big buckets are, web-based marketing, boots on the ground with sales reps, and then you have your mortgage broker channels, right? And the mortgage broker channel is at that time was the most effective way for us to build relationships nationwide. So we ended up spreading really across the eastern U.S., up the seaboard, and then just Lewis and Clark'd it out west hard and fast.
Did you guys jump? Because a lot of lenders from the East Coast jumped to coastal cities first and then started concentrating on Midwestern MSAs. But like a lot of, you just mentioned you just started going directly west. So, I mean, was it naturally just kind of like you started picking up volume in the Midwest? Because the Midwest is kind of a forgotten region for our industries. Not a lot of lenders would do that,
Yeah, it was more so of a progression from east to west than it was jumping from one coast to the other. We built out. We have a robust outside sales team.
I know.
Yeah.
I met a lot of them. They're great guys. Yeah,
for sure. Yeah, Courtney, you mentioned him, Matt, bunch of other guys that have been here. And back in the day, we didn't use AMCs very much, right? We were militant about quality control, right? And we felt that at that time, in the company's point, one of the best ways that we could make sure we had high quality control was running our own appraiser panel. So whenever we went into a new market, we were getting boots on the ground. We were making relationships with appraisers in market, having client events. So we were doing the Hares version of growth instead of just sprinting around into new markets, really trying to be methodical as we could be. It was a natural progression, and
that's interesting because a lot of folks, they talked about expansion and the concentration from a retail standpoint, and you guys took a wholesale standpoint, and it begs the question. That's a benefit of having an institutional partner, right? And so before that, I'm guessing you guys had like a small fund or investor-driven program, high net worth investors.
Yep.
So when was it? So was it 15 or was it 16 when you guys onboarded? Is it the same institutional partner that you have now, or is it a different one?
It was a different one then.
Okay.
Yeah.
15. But you approached your first financial institution to gain backing, but that was in 15, you said?
Yep.
Wow. Okay. So a little bit earlier. So I'm getting a very common thread here, right? So when most of the industry in 14 and 15, most of the industry was still, it was still the way it was, I guess you can say, before a lot of the aggregators on the scene came up, and institutions were always there, but they didn't jump in until mid 16. So I'm getting an early trend, early adopter, right? So,
for sure.
Let's talk about that real quick. I mean, partnering with an institutional investor can be hairy. It can be complicated. It can be burdensome. It can also be. It gives you amazing horsepower, but there's also a lot of sticks that come with that carrot. I mean, it must have been very challenging to scale the business and build the infrastructure to accommodate those needs.
It was definitely a challenge. It was something that in the previous 5 or so years of company existence just wasn't a thing. It was calling up.
Because before that, it was like an every man wear every hat kind of like, let's just get the job done kind of approach. A lot of small businesses,
For sure. We had an investment banking group come in in 15, and they, kind of scratching their head. They're like, hey, you have short-term finance underwriters doing like 4 different jobs. They're a salesperson, they're an underwriter, they're a closer, they are a draw processor, and they are kind of a quasi loan servicer too. So M15, that gave us the ability to really grow out individual divisions of the company.
So you guys engaged an investment banker to help you find your first institutional partner.
Yeah, we had one.
That's important. That's an important note, because that rings true to another national shop that we interviewed at our inaugural episode was with Anchor, and they did the same thing, right? And I keep telling folks, like, there are times when you need to speak to a professional to find those times.
Yeah, I mean, this industry feels so small sometimes. Right? You know everybody, and same thing in the IB world, that it just makes sense to plug into that relationship instead of trying to forge that path yourself. Right. Just the most efficient way up the mountain.
Right. So they came in and they were like, "You guys have an org chart that doesn't make any sense to us, and a roles and responsibilities chart that makes no sense to us," and that really clicked for you guys.
Yeah, like you said, it was kind of the natural startup environment where everybody's wearing a million hats, everybody's running around, screaming, shouting, hooting, and hollering.
Sure, yeah. It's exciting, right? Yep. But to an investment banker, it's like, what? How does this business? So was it that after you guys engaged them, they really forced you guys to get really departments and roles and responsibilities all specialized under certain individuals?
I think it was more really just a passing comment that was made, and the light bulb went off on our leadership team's head of like, now is a great time to start building out servicing of more than one person, building out all these departments so we can have more specialization. That's the natural progression for the company. So, and super fortunate on my end, big believer in, good luck, bad luck, stuff happens, and lucky timing was definitely a big benefit when I look back. Last week, marks the 6-year anniversary for me being here.
Nice.
And was a little thoughtful, and all right, 6 years, let's take a minute to take stock of what happened.
In 6 years, I mean, you guys went from Southeastern shop to national shop, built a wholesale program, and of course, it's been all the news. We're recently acquired by a multinational financial institution. So I mean, that's a lot of milestones in 6 years.
It literally gives me chills as we're talking about it now.
And you got to make sure you tell the whole team, like, we send our congratulations, because like it's very rare to see that kind of stuff happen. It's you hear about deals happening here and there, but like not in the speed in which in 6 years time. That's because from foundation to 15, and then from 15 onwards, it sounds like you guys are two totally different companies.
Yeah, I really think so. It was definitely you could count on one or two hands pre-15 the number of people at the firm, and it was rehab focused, and then 15 forward was really where the sprint began.
Right.
And branching out into programs, multifamily, that's something that we dove into, I think beginning of 2017, multifamily space. And so always, one beautiful thing about always being in fifth gear, looking back, is that there is it's deeply ingrained in our culture that where we are today is never good enough. It's never, ever good enough, to a painful point sometimes. It's always forward looking. We had a record month last month. Okay, you acknowledge that and move on to the next one, and we need to continue being better and better and better, doing more and more. So it's that kind of day one startup mentality is still rampant throughout the firm. And that raises an interesting question, because we've had that challenge here at the law firm. We've doubled and doubled over again, and we've felt significant growing pains where we had to kind of really reevaluate things. And you guys doubled and doubled and having record years, and reorganizing the back office and the front office and adding people left and right and growing. I mean, there's had to have been a ton of growing pains over the years. How do you guys address that? Yeah, definitely not painless, right?
Yeah. I mean,
Exciting,
of course, right? I
fun.
mean, I would imagine, I mean, it would be, it would make any sense if you said it was painless.
No, absolutely. Pull out your hair moments. And it kind of follows the linear progression of 25 people, 50, 100,
Right.
150, 200 on, when I look back, you can see noted differences and challenges that we had to keep that deep drive in the culture the same, different tech issues and hurdles that
Right.
we made decisions when we had 25 people, and when we got to 100, it's like, all right, we need to kind of wipe everything off the whiteboard and completely rethink how we approach process, product type on different things. So, yeah, we have not been without those growing pains. The biggest thing, one of the core things I think, is that our retention has been incredible, right? So
Yeah, I was going to bring that up. Like, you guys have all been with the company for quite a long time. Not much turnover from people that I know, at least. And in hectic time, I mean, when you're growing that fast, there is so much chaos going on, and people get burnt out. I mean, how do you keep them on board?
Yeah, that's the thing, is that people can find themselves attracted to that environment in theory, but in practice, can be very quickly turned off by it. Very young company, right? Our average age of employee, we have about 200 employees now. Average age is probably 25, 26.
A lot of energy.
Yep. I'm 28. My colleagues, who are my peers on the director side of the fence, a lot of them are early 30s, mid 30s. And so, when I look back to when a lot of those folks were hired, when I was hired, this was for most of us, our first job out of college, our first real career. If it wasn't your job, it was the first thing that you got into that you're like, all right, I can see growth and progression here. And the loyalty was there. We wanted to stick.
What about the company makes, because young people, especially, they get courted too, right? And it's a growing industry, and a lot of people move around. But like, what is the company? What about the company is keeping people like you, and I know Courtney's been there for a long time, but other folks there for such a long time, keeping that kind of loyalty?
Yeah, the incessant drive for growth is a piece. The leadership at the top of the pyramid, right? We have believed in them, right? John and John, the guys who founded the company, we all, to this day, I have great respect and deference to them, and we just believed in them as people, right? John Warren, probably the most intense human being that I've ever met in person. And so really, you take a lot of us who were getting into our first career, certainly at an impressionable state and wanting to, highly ambitious, highly driven,
right?
First place is the only place type mindset. And you get into an environment where there was no BS, no excuses. There was always room for improvement across everything. So the incredibly high standards that we were all held to in the beginning, as we branched out from kind of frontline positions, moved into leadership roles, began building out our own divisions, hiring people, being on the front lines of training. We all knew and talked about, and to this day talk about, culture. We had a director's offsite yesterday.
Yeah.
And, a big chunk of that is culture. We recognize that as one of our biggest proprietary features, right? Pricing, product, all of these things are relatively commoditized at this point.
Mm-hmm.
And how we have, like, what's your competitive advantage? If it's pricing, if it's product, that is shaky ground to be on.
Right.
You can have a competitor's partner say, okay, I understand that Lima One Capital has A, B, and C product with this pricing, and you need to get beneath them by 25 bips to beat them out.
Right.
That's not a fun game to play. So while we always, we work tirelessly to be competitive in those strats, I think our real competitive advantage is our people.
Right.
and the culture there.
So can you describe that for me? Because a lot of firms, a lot of companies talk about culture in the form of values, right? They have company values or core values. We have core values here at the law firm, and a lot of companies look at it from a customer service standpoint, or they have different means of building culture and almost preaching their culture, right? What do you guys do internally?
Yeah, so a couple of the core pillars, really just honesty, integrity, transparency. Those pieces flood throughout not only people and conversations, but in the way we have always priced, the way we have had term sheets. If it's not on the term sheet, it's not getting charged, right? So there's, you go back a few years and you had different levels of actors in the space, more so than today. And so we were always of the mindset that we are not going to operate that way, right? We are always going to be above board in everything that we do. So from a, keep that ball moving down the field mindset, the first week that an employee comes aboard, we have sun up to sundown, first week corporate training, right? We have a class every month. Usually it's the first Tuesday of every month because of the holiday in July this month. It's going to be next week. And we walk people through, we walk every new hire, regardless of what department you're being hired into. So you're in there with accountants, software developers,
even new executives, right? So even new C-level, even if you were to bring on a new C-level executive, they would be sitting in that meeting.
Yep, 100%. Everybody from every part of the org. If you are coming in, you come in on that Tuesday. You sit down in the training room, which is right outside of my office here. And the first day, our executive leadership team goes through, talks about their piece of the pie, talks about culture and values, right? Jeff spends a couple hours talking on culture, company history, core values. And then from the second day forward through the end of the week, we kind of structure it on life of a loan, right? So we take someone, life of a loan is the theme that we landed on that you can really hang on to as a new associate and follow. Okay, I understand that loans are what drives our business. I'm going to get a lesson from every department head. It's not frontline folks. It is compulsory that unless there is some incredible emergency going on, directors, managing directors, and ELT, those are the folks who are teaching these classes. So we're putting our highest folks on the hierarchy in front of new associates to really set the tone. What are expectations, not only from a performance standpoint, but just from the value standpoint, right?
So very organized and very firm and almost mandatory training from higher up leadership is, and you're giving the actual. So, like life of a loan, you're describing it from different departments' perspectives of start to finish of a loan.
Exactly. Yeah. So
that's awesome.
Like, marketing.
You're not only teaching the business, you're teaching the culture, company history. It sounds almost like the military.
Yeah, exactly. So
you're sitting in the training. You're given all the details you need from various people in charge of various different divisions. I like that.
You hit the nail on the head. My simple mind should have thrown that fact out quicker, but yeah. So John and John, both infantry Marines, and the concept came from there. It's like, doesn't matter what your history is, what your background is, where you came from, what you did. Like you're a smart, ambitious person who we have tapped to come in here and help us build this further. We are going to teach you everything you need to know, top to bottom. I had no industry experience. Courtney had no industry experience. Like almost none of us had industry experience whenever we came here. We were brought up through the same training regiment. The one that I described to you now, it's evolved. It's gotten more built out over the years, but the same training structure was in place when I got here. And that's the whole idea. We're going to build you up into a highly effective operator in this space, whether you are an accountant or a servicing person or you're a salesperson. We are going to train you up to be the absolute best that you can be in that particular role. with huge opportunity for growth. So it's incredibly exciting. And like I said, we're right downtown. We have company events that, COVID put a kibosh on, but we're getting back to them. We have a top golf outing next week. We got
Nice.
a baseball team in town. So
You're also making it fun to work there.
Exactly. We have Beer Cart Thursday, which is 2 hours and 28 minutes away. So every Thursday we troll around a couple of carts full of random beers.
Oh, nice.
And
and how many employees are you guys currently have right now? Because you said you were in the, you said you have 40 plus servicing, but like, let's just like kind of progression wise. I know you started with 2, but like in 15 when you started, how many employees?
Yeah, mid-teens, right?
Okay.
So I'm employee 14, and then challenging my memory to go year by year.
Well, let's just go right now. Like at this current moment in time, how many employees do you guys have?
We have right around 200 employees. And
wow.
So the last part of 2015, really the second half of 2015, that started the flywheel of pretty much a month never went by where we didn't have a hiring class. Now in 2015 and early 2016, sometimes that would be 2 or 3 people coming in, but nonetheless, we had hiring classes, and now our average hiring class is 10, 15 people.
And how would you say it kind of breaks down from like, back office to, front office and sales and that kind of stuff?
Yeah. So if we're looking at, say the back half of this year, what we're looking to fill, half the positions are probably sales related, really continuing to expand our outside sales teams all over the country. Expanding our inside sales team as well, probably the same number that we're hiring on outside sales, we're hiring on inside.
I saw that on your guys' website. It's not a usual descriptor being used in the space. So explain to us what outside sales versus inside sales. What does that refer to?
Sure. So we've kind of bifurcated our sales channels outside and inside. So outside is going to be kind of a lone wolf sales rep who is physically in a market that we are just always trying to grab more market share in. Think Atlanta, Chicago, Dallas, Orlando, Miami, LA, San Francisco, big markets, right? They are pounding the pavement, getting in front of folks, going to local real estate meetups, kind of smaller and regional conferences that are in their area where we don't need to send a contingent of 15 people like we are to IMN in a couple of weeks.
Right.
They're heading up those efforts, doing client events themselves in markets. So it is really your
retail operation, your local retail operation.
Mm-hmm. Yep, exactly.
Very cool.
And then we've built out our inside sales side of the fence. So those are folks that sit here. Everybody's on the 4th floor outside of me. This is our first week at 100% capacity since COVID. So
awesome.
Super excited.
Congratulations. Yeah, that's awesome.
Different vibe, right? So much more fun. Leadership, we've been here since June 2020, but having everybody back in the office. It's fun. So the inside sales team, those are folks that handle most of the web leads, list buys that come in. They also travel out. So we have a couple of them going to IMN with us next week. So they'll go out to conferences. We have a team that specializes in mortgage broker relations. So all of our sales reps can work with mortgage brokers, but we have one team that the one that I built out starting in 15 that their sole focus is the mortgage broker group. Right? We identified early on that it's a unique enough set of clientele in and of itself that we need to put some dedicated brain power into it to really build out that channel. And
motivations are completely different. And,
exactly.
And every geography is different too. I mean, it's fascinating to see you. I met originators from all the countries, brokers from all the country, and they're all so different in how they do business. So,
yeah, and a fun crowd too.
Awesome. Oh yeah,
that's good.
You want to have fun at a party. You go to a party for brokers.
I have yet to meet a mortgage broker, no matter the age, that I can outdrink. So I'm working on it. But I have not made it to the mountaintop yet.
Oh, good luck. Good luck there. They can, oh yeah, they get down. Before we move on, I really want to tell you about a great sponsor that's joined us for the show. Spiegel Accountancy is a national, professional accounting firm specializing in tax, audit, and fund administration with over 20 years in the private lending space. Using an industry expert allows the fund manager to ask tough questions, such as, what are the accounting and tax impacts of loan loss reserves, delinquencies, or foreclosures? As a trusted CPA source for the private lending industry, Spiegel ensures clients' financial reporting meets the highest standards. For more information, head to their new website at spiegel.cpa. That's SPIEGEL.CPA. Spiegel is your strategic and innovative accounting partner. Well, that's pretty cool, though, because you guys are very, very intentional about how you're approaching sales. And I would normally see this done by, kind of either a kind of a unified team or, and you guys have intentionally separated it. And that's very important. And that begs the question, these outside sales executives, they're in every state now, all 46 states?
They're not in every state.
Okay.
So we have probably 15, somewhere in the high teens, outside sales reps. And then we're going to add about just as many through the end of the year. And so we'll have coverage by the end of the year, probably in half the states.
Nice.
We have multiple, in California, we have more than one sales rep, right? We have probably 3 or 4 people out there. So your more populated states, we have a higher presence of
population density, more reps. That makes sense. But I want to talk about so currently you guys are now in 46 states. You guys are offering all the products in the industry: fix and flip, rehab, construction, DSCR. You're doing commercial and multifamily, right? You're doing a lot of different type of product right now. Right. What is kind of Lima One's? What are you guys really, really, really known for? What is this is we're the best at this, and you can say all of them, I guess. I mean, but
Yeah, I think the one key piece that we've always been great at, a couple of points. One thing is scalability for an investor, right? We started off doing financing folks who are doing their very first flip, their very first rental project. So we have kept that. We've always had lower loan minimums than competitors. Part of that's geography, right? We're based in Greenville, South Carolina, started in the Southeast, whereas a lot of competition based in California, New York, Florida, higher end markets.
Right.
So that ability for an investor to have a partner end to end from the time they step foot in real estate investing all the way through growing their business. We've seen we have no shortage of folks who came to us for their first loan ever, very first project, and then they moved up. We have a tiered system based on experience, and that drives pricing, a bunch of perks and benefits, leverage. And, some of my favorite client stories are people who started off with us as a tier 1, never done a deal before, and now they're tier 5. They have quit the job they were doing before. They are doing this full time. They are real estate investors. They have a team built out. So that's one piece I think that we've kept always being,
and that's across the spectrum on all products.
Yeah. The one caveat to that is multifamily. Right. That's
a little bit weirder. Yeah. You can't really,
you don't want to buy a $5 million multifamily project as your first deal. That's a rare bird. So,
right.
But yeah, across fix and flip, rental, really light experienced investors having the support there for them to go start to finish. And we have in-house construction management and servicing. Those are 2 huge pieces. I touched on the quality control piece. We want to control as much as we can end to end in-house. So the 4th floor here is all sales. The floor beneath is where operations, servicing, construction management is. And so we've built out organically from 0 employees on up, construction management and loan servicing. So when you close a loan with Lima One Capital, We're not selling off servicing rights. And then if there's a servicing issue, we tell you to go talk to this other group.
Right.
We don't have anything to do with it. We service everything in-house. That helps with our portal integration. So we have a portal that everything is there. If you need to request a draw, if you need to make a payment, if you have servicing questions, new deal, allows us to keep everything in-house. So that's a huge benefit, I think, is that whenever, we outsource as little as possible outside of these four walls. And that allows us to tackle any issues that pop up very quickly.
Right.
And allows us to keep honing the blade because we control everything, right? So the big piece now is we have product and pricing development committees where we meet constantly to make sure we're always working on making products better. We never
not necessarily cheaper, but better.
Right. Sometimes the answer is cheaper. We'll find out, hey, we've seen a slew of data that shows us we are, 25 bips high on 30-year fixed rate loans.
Right.
Sometimes it is that, but more and more, increasingly, it has become the non-pricing, non-leverage features that really make the difference just because, again, the commoditization, which is a great thing. It's allowed, the capital in this space is immensely greater than it was 5 years ago.
Right.
So the accessibility is there, but working on not only the product and pricing side of the fence, but the customer experience side of the fence.
Mm-hmm.
I moved into that role, about a year ago. And previously we had thought about it kind of as committee, right? What does everybody think customer experience looks like? And we decided it was high time to really put accountability on the shoulders of some people and think of that as really a chief competitive advantage. We have all of these great things in-house with spectacular people and a culture that helps solve issues quickly and in the most optimal way possible. And so the customer experience piece is really a huge focus and has been. We spent a lot of time during COVID, right? So March 2020, mid-March, that's when capital markets just froze for a bit, right? And we did some volume during COVID, but we really were want to be cautious, conservative, and
let's talk about that. I mean, I always ask during these interviews because we're just getting out of it, right?
Sure.
And so you guys are back in the office now, but 2020 was a hell of a ride. The bigger you were, the more pain you felt, right? And the more institutionally tied you were, the more pain you felt.
Yes.
I mean, what was that like? What was you guys? You just said you guys became you guys pulled ranks, said we're going to be very conservative. We don't know what's happening, right? Was that?
Yes,
basically.
So mid-March, we were kind of leadership got pulled onto a phone call. I was going up we have the Whitewater Center in Charlotte, an hour and a half away. So my wife and I were going up there for the day just to have fun. Stopped to get on this call and it was like, hey, we're starting to hear and see some things on the capital market side of the fence. There's this virus that's going on. Don't really know exactly what's happening, but starting to hear some weird murmurs and stuff. So you fast forward a couple of days after that, it went from just a slightly strange phone call of, hey, nobody really knows exactly what this is or what implications it's going to have, but it's potentially big enough that we're going to kind of huddle up and chat about it. A couple of days later, pull the plug. Nobody goes to the office. Everybody is in a permanent remote state for the foreseeable future. And then, like you said, the bigger you were, the more institutionally tied you were. Whenever capital markets froze, we moved into just kind of a holding and observation pattern. We did some volume each month, but really used that time productively. The biggest fear was that our team sat on the sidelines and got rusty, right?
Yeah.
So we use that time for coaching across all parts of the hierarchy.
Just like the military.
Yeah,
train. Hurry up and wait.
Train.
Yeah.
Bingo. So that's it. We had leadership training ongoing. We had, I did a lot of gamification with sales. So we had like a March Madness bracket where we got all the company on to really vote on who was pitching better. And then we used the time to really retool processes. We came out with our new line of credit products. So really made the best of it, right? We did not want people getting rusty. We did not want to fall behind because
that must have been painful. I mean, from a balance sheet standpoint, from a bottom line standpoint, I mean, production's down. You're doing a lot of administrative, process building and training. But I mean, everyone felt the pain, especially larger shops. Like production was down, right? We're doing a fraction of what we used to do. I mean, how was company health? I mean, you guys, culture, you're a young team. I mean, how much was retention an issue? I mean,
retention was not an issue. We kept everybody who wanted to keep on aboard.
Right.
It was we moved people around, right? So we had a highly skilled sales team that didn't really need to go do a bunch of selling right now. So
they couldn't really either. All they could do was through this. So
exactly right. And a lot of investors were also kind of waiting to see what was going to happen. We did not know, the best guess was, hey, this is not going to be a great recession type thing in terms of what happened with real estate, because you had true, you had fraud and underlying issues in 07, 08, contributing to that collapse that just weren't here. This was a
liquidity event. This was basically, there's no money. Sorry, guys.
Yeah.
We can't give you money right now.
Yeah. And the core issue leading to that is healthcare related, right? So
of course,
the underlying issue was not real estate. So we knew we were going to come back online fully at some time, just didn't know what the timeline was.
So executive understood that this is not going to be like 08.
Right. Yep. Right out of the gate. And that's why we were dead set. We want to keep everybody aboard the ship, keep people active, train. Like you said, we repositioned people. What we wanted to get out in front of was anything servicing related.
Oh,
right?
sure.
So we didn't know what loan performance was going to look like.
Right.
And,
everyone was expecting a massive wave of defaults, massive wave of foreclosures and evictions. And,
the daily reporting that we all moved to on the leadership side for servicing, because we all had people tasked out to the servicing team.
Right.
It was a nail biter every time you opened the email, and it was like, please, we don't want to see a drop off. and thankfully, performance held way stronger than I anticipated. I think way stronger than anybody anticipated.
On the construction side, you guys didn't feel much pain. There were certain markets where they couldn't build anymore for a while, and it could solid 3 months, right?
Yeah, that was probably the biggest issue that we had. Not that it was a large issue, but the most pronounced.
That's what everyone was telling me. Like it's the builders that are causing us the biggest pain. So
and like you said, it's they want to get out there and they want to build, but you had offices shut. Permitting was just non-existent in a lot of markets.
Local government wouldn't let them do it either. I mean, in certain cities, north in New York, I know was stopped for a long time.
Yeah.
Strangely enough, here in California, they let them build. But let me ask you this though. I mean, so when we're dealing with so the model. So this is a lot in 2020. You guys, this is pre-big announcement for you guys, and we'll get to that in a second. And so the model. You guys have your wholesale arm. You have an institutional partner. And the model at the time, was it balance sheet? Was it balance sheet sell off? Was it securitized? What was the model from a capital market standpoint for Lima One?
Yeah, all three you noted there: balance sheet, sell off, and securitize. We had gone through securitizing some batches of the long-term rental 30 product, really successful there. So I forget the time, but probably 2017 or 18 was our first securitization there. So
once again, early adopter, very good.
I know. Yeah. It's good.
That's interesting. So during that crisis, I mean, since it's in the past and you guys are killing it now, I mean, you guys have a record month over record month. I mean, let's talk about that real quick. I mean, how bad was it for you guys, like from a production standpoint?
Production was incredibly low. The e-brake was put on.
Oh yeah.
Right. Okay. Without attaching a hard number, the e-brake was put onto it.
Fair enough. And thank you for being honest about it, because I know it's a sensitive issue, but I feel like you guys have really jumped got out of that mess, but we were all in. So
yeah, the big thing for us was communication. We identified immediately, like, we got to start talking to people. So that's where we tasked folks from sales and underwriting to, hey, you are now a loan servicer. You're now a senior portfolio analyst. We moved people kind of laterally into the servicing realm because they needed, their phone volume went through the roof, their conversations, because like you said, you had people who needed some help, needed some assistance. They needed some workarounds. They had issues that were well above and beyond their control. And they just needed to talk to their lending partner to see, how can we get through this together? The last thing
that must have been great for cross training, though. So now your sales guys understand the pain of servicing and vice versa. And
yeah, it was great. We ended up having some folks, finding roles for them carved out in the servicing world, for them to have a jump up, right? Like, hey, you're a frontline underwriter, but there's one fella who, in particular, I'm thinking of, he's underwriter on the fix and flip side of the fence, and then moved into a senior role in the servicing team, where he has a team underneath him and helps guide, coach, mentor those folks, and brings a different approach, different background. I'm a huge believer in diversity in thought. Right? As I built out my team, I was always looking for signs that, like, you just think differently than I do. And I don't definitely put my finger on what it is, but I value the fact that you approach things differently, think differently. If you build out a team of people, a company, whatever it may be, with people who think and act like you, it's just a recipe for disaster, because you all
echo chamber.
Yeah, you have groupthink going on, and it's just, you all see the same problems. You all look down the fairway, see the same thing. And so it was great to be able to, temporarily reposition people to solve a need in the business. The cross-training piece, keeping people busy, not just sitting there stale, nothing to do. So we really did make the best of the COVID
crisis. Yeah. So let's transition, because earlier this year, this big news in the industry. You guys were acquired by MFA, and we were all very, very happy to hear that. And big congrats to you and the team. It must have been a very, very long due diligence process and closing process, and kudos to you guys for getting that done. Yeah. But now, what does that put you guys? It's exciting stuff. You guys are now, I think this is the third or fourth group that we know now that has been acquired by a major institution, but different in the sense that you guys have had a relationship for a while before this, right?
Yeah, exactly. Yeah. So the due diligence process was actually pretty painless at this point. Years ago, whenever MFA took a position in Lima One Capital, they've been a partner for a number of years now. They had a stake, and they
had an ownership stake in the company.
Yep. Yeah. They owned part of us. We had a great relationship through a number of functions, loan sale side of the fence, and really good relationship with them since the relationship was established. And whenever, kind of things transpired, to have the conversation of, hey, you're interested in wholly acquiring the rest of the company.
Right.
It's an incredible testament to, the small square footage and number of offices that this started off as. When I got here in 2015, what I saw, how we are today, to really seeing that next chapter come in. The good thing about them having been a partial owner previously is that they knew us, we knew them.
Right. So no surprises.
Exactly. And that helped, I think, especially for a younger staff, that helped quell a lot of potential concerns of like, ooh, we just got acquired. What does that mean? Are they going to, are they going to
usual fears when M&A happens is that, are they going to clear house? What's going on? Are we going to be able, do we have a job? That happens.
And even
very natural question,
not just frontline, but all the way up
throughout the organization. Yeah. Even C-level. Yeah.
Exactly. So that was something that was not even a question. right?
Fantastic.
They knew us. Jeff had been, of course, working with them since he came aboard. So very tight and positive relationship. Always great. And so that was a big piece that made the transition not much of a transition.
Right. And so that's the big question I want to ask you, right? Because Lima One's still Lima One. You have new owners, but Lima One's still Lima One. No rebrand, no change of name, no change of Jeff's still there. Everyone's still there.
Yep.
Operations still seem to be the same. So what's different, right? What has changed now that you have a new the MFA now owns the company? Is it just a horsepower, capabilities, and reach? You guys now have, more of that, or is it something else? Are there new markets? Are there new endeavors that Lima One's going to tap into now?
Yeah. So a little bit of both, right? So we have now a consistent source of funding that's really going to help us continue to improve the offering to clients. Right. Whereas previously I mentioned we were, selling, securitizing, balance sheeting some stuff. Now every loan we originate at Lima One Capital that's a Lima One Capital loan, right? Because we are wholly owned by MFA. So we have to think of it through that lens. But it helps simplify things on that side of the fence a lot from a capital standpoint.
Capital constraints are no longer a problem.
Right.
Liquidity is no longer a problem. Right.
Exactly. And we've had a great team, our CFO, our capital markets team have always been spectacular in looking down the field, making sure that we had what we needed, not for today, but for 1, 2, 6, 12 months down the road for growth. That's always been, you have to stay in front of the tiger that's constantly chasing you. Right. Everybody's worst fear, especially in the earlier days, you never wanted to be in a position where you didn't have enough money to fund a loan.
Right.
That's a lender's nightmare.
Right.
So not that hasn't been the case for us for many, 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 many years, well before I got here. But this puts us in a different realm where we have a partner, our interests are singularly and wholly aligned. And there's nothing but genuine excitement. Like you said, our company is still wholly intact down to a single person, right? Jeff's going to be here for the foreseeable future. The rest of the executive leadership team.
And that's also very rare, by the way. I mean, I've watched different acquisitions happen, and I think this is the first where the entire team is intact.
Yeah.
And that raises a very interesting question from strategy, because having them as a minority partner before, or a smaller partner before, really cements the existing team, so you don't rock the boat as much. Because we have seen struggles once they've been acquired. They do the traditional, let's gut it, fill it with our people, and they don't do so hot, right? And so, and I know you guys are killing it right now. You guys are having record months. But you guys aren't expanding the product offering, right? You guys aren't going to jump into all of a sudden doing non-QM or something like that, right?
Yeah, that's not the game plan. Okay. The idea is that we're a well-oiled big machine, and we do what we do well. We're really, because they were partial and now full, we're just carrying on the same conversations that we were having.
Fantastic.
Pre-acquisition from a product and pricing.
And all those relationships remain with the company, and that's the most important thing, I think. Yeah. Well, I mean, so looking into 2021, we're officially past the half-year mark. We're almost out of COVID. You guys have, really, not shocked the industry, but really impressed the industry with this new arrangement, but also retention and all that kind of fun stuff. We're looking forward. We just talked about what you guys are going to be working on and concentrating, doubling down on what you guys are doing well. But let's look forward. I mean, because you guys are a national shop, right? And I want to ask you guys kind of what you guys are thinking about when it comes to both the national market, residential real estate market as a whole, but especially in your primary MSAs, right? Where you guys are really hot, right? How are things looking for you guys? Because there's a lot of, we have to have the crystal ball discussion, and we've had some national shops on, we've had some local shops on, but there's a pretty consistent line of thought right now is they're all still very optimistic, and things are looking very positive, and a lot of folks have echoed your sentiments about record months, right? I've had many balance sheet clients, fund managers, retail operators telling me that we're having a record month. So clearly the market is hot right now.
Sure.
Because you guys are looking, and you guys have a much larger team with a lot of people thinking in different ways. Mm-hmm. What are you guys thinking about going forward into the next year and beyond that?
Yeah, I think a couple things. The biggest thing on my radar, and I think a lot of my colleagues' radar, has been new construction.
Right.
We have a huge backlog of inventory that needs to be filled. Usually you have 6 months of housing stock, of dry powder, and it's half that right now. So that demand is not going away. So new construction, if you asked me today, what is the strongest single product offering? If you had to close off everything else, do one thing.
Right.
This is my personal piece, just Dalton Elliott. My pick would be new construction. I think we do it incredibly well. And I think the environment over the next few years is highly favorable for that to be continue to be a core product set of ours, but be one of the biggest areas of growth for us. Yep. And like you said, so many folks were just completely sidelined. You had no shortage of lots and subdivisions, and you just couldn't build. So that building backlog, materials prices skyrocketed, right? But we could spend another hour talking about lumber, logistics, and pricing and manufacturing and all of that. Oh, yeah. So you have so much of that has an impact on your standard rehabs, but
construction, really starts to sting.
Yeah, many magnitudes greater. So,
but I want to follow up on something you said though, because you said about new lots being built. Where we are right now, there's a problem because not only do we have an inventory issue, but we've got a density problem where we can't build anymore. We're really in a place where we have to tear down and rebuild, or move to the desert or somewhere else that's not so attractive to live. In your I guess your primary MSAs, is there still a lot of room to build?
It depends. So we have a lot of the same stuff that you mentioned, Pacific Northwest.
It's just all right. There's no room left.
Yeah. So we have markets where we are heavy on the tear down rebuilds, right? Mm-hmm. Complete gut jobs.
Right.
So that all rolls into the new construction project for us for loan metrics and pricing. We view the risk similar there, and so we bundle it up in the same project and the expertise required. So we bundle that in the same product. But yeah, the same kind of things that you're seeing in your market, that's what we are hearing and running into. So the one-stop shop piece you asked about, kind of competitive advantages. That's one thing, again, that has been super helpful over the years, is that we have a pretty big tent, and it's not just, let's go vertical. We have the capacity to, from a risk standpoint, really look at and manage the risk on tear down rebuilds, full guts, everything there as well. So the new construction piece is big. Rental has far outpaced everybody's expectations. Coming out of COVID from a lending standpoint, I think June of last year is when the engine started to turn back on for most everybody.
But it was rental was first.
Yeah, rental has been sprinting. Rental has been incredible. It's far outpaced projections, and which is an absolutely wonderful thing. Rental is, from one standpoint, easier to underwrite than rehabs or new construction, right? You were looking at the as-is value and the current cash flow or projected cash flow, which those are pretty easily obtainable and reliable metrics.
Right.
Now, the one piece that, I guess two pieces, looking over the next 12, 18 months, you have the market as a whole, right? So you look at prices, which have just been on fire. I think Austin the other day I saw is numero uno at 38% year over year as of May.
Yep.
Insane increases, literally insane in some areas, right? You're absolutely going to see some markets that have some hard pullbacks. It is a guessing game as to which, but then you have markets that have more. They had, call it kind of a backlog of appreciation that was due. I look at our market here in Greenville, South Carolina, and a place that has, I came up here for college in 2011, so I've been here for 10 years, be there next month. And the city itself has grown so much.
Right.
And so you can really point to, all right, where is this appreciation coming from? What's the root? What's the reason? There are definitely some markets that are on fire because they were close to the fire. So that's going to be something that we're going to have to watch out and try to figure that out.
You're hitting something there that everyone talks about is valuations, right?
Yeah.
Because valuations are a good thing, but they're also an indicator of bad things.
Yes.
Right. And so, and I've had a lot of discussions with people who are on the other side of the coin, right? They invest in rental real estate, they hold these assets, and the sentiment from their perspective seems to be that we can't get our hands on the stuff that we want because the big shops are buying up everything. And when they say the big shops, they're talking the rocks and the stones, the actual institutions.
Yep.
And that's causing they're benefiting because it's increasing pricing. But they're also suffering because they can't get stuff. They want to invest and they can't. They really can't get their hands on it. They're losing bids every day. And so it's an interesting component where, if more of these assets get into a rental situation, what does that situate us on construction, on rehab, and everything else, and ownership in general? But like it's a kind of, is this the, what do you call it? Like the the snake that eats itself almost, right? Is it going to hurt us in the long run? Is it kind of a topic that's been brought up, not by lenders, actually, more by the investor side. But I mean, most of us in our industry, we kind of look at it from a 12 to 18 month, right? So I always ask, just general, and when in the interviews, looking into the rest of 21 into 22, all 22.
Yep.
Bullish, bearish, what do you think?
Bullish.
All right.
Very bullish.
Very bullish. Very bullish. All right.
Yeah, I think there are a few signs that, as much as you can prognosticate 12 months, 18 months is the upper edge of any appetite for prognostication. But I think all of the levers are just in the on and up position right now. Right. And like you said, we're going to see some indicators whenever the cool off starts to happen, and nobody's expecting a precipitous drop off or anything like that. You're just going to have
cross our fingers.
Right. But we don't expect, Austin to have a year from now another 38% year over year.
Right. I mean, with after 2020, man, all of a sudden aliens can drop from the sky. Who knows? Such a wild ride last year. I mean,
I just guess, but yeah, I'm super bullish. The team as a whole, we talk about it on a weekly basis, just broad market outlook, and our capital markets team circulates kind of their reading of the tea leaves as well to keep us all
very cool.
And so extremely bullish, man.
Well, that's a really good note to close the podcast on. I want to thank you for taking the time today. I've been wanting to sit down with you for some time, just in general, and really appreciate you guys taking the time. And hopefully we'll see you in person at the next trade show, because we're all out there now. We're all back in the office and we're all out there at the trade shows. We'll see you soon out there. This is Kevin Kim for season 2 of the Lender Lounge with Kevin Kim, and we'll see you on the next one. Thank you, Dalton, for joining us today.
Thanks, Kevin.
All right. Thanks for listening to Lender Lounge with Kevin Kim. I hope you enjoyed this episode as much as I did. If you did enjoy, please leave us a 5-star review on your podcast platform, and be sure to follow our show to be notified of new episodes. If you're on YouTube, don't forget to smash that like button and hit subscribe for more content from all of us here at Jurassic. Lender Lounge with Kevin Kim is available on all podcast platforms. Referrals really help us spread the word, so please send this over to someone you think might enjoy it. See you next time. This is Kevin Kim, signing off.